Very good. Hi, everybody. Thank you for the introduction, David. I'm going to tell you a little bit about myself anyway. I guess I'll be the mystery guy, although it's no mystery. I'm all over the place on online for the last probably 20 years. But I wanted to thank, first of all, Anka and David for having me again. And Matt for waking up everybody, being the first presentation. I wanted to do a presentation today that really comes down to reality about trading. I'm going to kind of bring you down a little bit, and then I'm going to lift you up. So no crying. I want to talk about how not to be the turkey when it comes to trading. And I want to do that through this particular picture here. These are actually the way turkeys are raised, and I'm not making you wrong for not getting a grass roaming turkey, but I do want to point out that probably 90 or 95% of turkeys that are sold out there live in this kind of condition where they're all bunched up in I read something where there's 15,000 turkeys in one facility, all indoor, in an indoor facility like this. And, you know, I said, well, you know, that's about the same percentage of traders who lose, day traders. And you know, the 10% of winners you really don't see here. But I thought, you know, this is kind of the way traders who are not winning are looking around and trying to find answers. Why is it that I'm not being successful? And I want to point out exactly some of those reasons that I believe is the case. And then I'm going to help you with a few solutions. But a little bit about me. I've been in this a little over 39 years, but I don't mention it because it makes me look old. I've written several books. I think these are the ones that are still on Amazon. I've done the video thing down at the bottom, the 404, are one of 203 4-minute drills for traders that I've done. I stopped doing about 3 or 4 years ago because I realized I was starting to repeat myself with about the last 10 or 12, but those are 4-minute drills for traders that you can find if you Google that on YouTube. I worked for PaineWebber for a while, for a couple of years. They had me there as a commodity specialist. They actually bought my contract from the International Trading Group, of which I was that was a very large, one of the largest option firms in the country, of which I was a regional vice president. And they needed to bulk up their futures and options area, and that's why I went over to PaineWebber. And but after that, you know, PaineWebber really was a little bit institutionalized for me. And when they wanted me to branch out and sell mutual funds, I said, this probably is not where I want to be. So I started the Hallett Group, which managed large amounts of money for rich, you know, people who are qualified investors, and managed millions in my own commodity trading advisory. I cleared through my own IB, the Hallett Commodities. I guess I couldn't figure out a better name. And but really, I'm most proud of the last 20 years where I've developed a disciplined trader, which concentrates on what I believe is the missing piece in that 10%, 90 percentile, and that's really concentrating on the psychology, but doing it in a way that's not dry, but something that works quickly and lasts a long time. I want to ask if you believe that this is true. 90% of traders lose money. We hear this. And when I say lose money, I mean lose money, or even those that are dealing with break even all the time and are just losing time. But do you believe that 90% of traders lose money? And when I say traders, I'm talking about equities, futures, all kinds of, any kind of day trader. What do you think? Just mention in the chat, and I want to hear if you believe that that is a true statement or not. Okay, I see it true. Let's see, Pete says it's true. Well, Danny says it's true. Is it true from experience, you guys, or is it true because you were in that tent, in that turkey coop, and now you're out of it? I want to show you, thank you, Chris. I want to show you 4 studies that that are really proof that if you try to Google it, proof of how many traders win and lose, it's going to take a lot of work to dig in. I think the world, or the investment world at large, really doesn't want you to see these studies. You got to kind of dig in. There's a couple that are obvious that show pretty easily. One is done by the North American Securities Administration Association. 100 years ago, a small group of state security regulators had a big idea: form a network of colleagues to work together for the protection of investors throughout North America. Today, that group is made up of the securities regulators in the United States, Canada, Mexico, and together they are the North American Securities Administration Association. I took that quote from their site. I'm going to show you that study in a second. I'm just going to briefly show you quickly, maybe 60 seconds of each. And I want to show you the European Securities and Market Authority study. Actually, the European Securities and Marketing Authority is an independent European Union authority that contributes to safeguarding the stability of the EU's financial system by enhancing the protection of investors and promoting stable and orderly financial markets. They're kind of like our SEC and so on, but they similar protection-oriented organization that's governmental based. This 4th study I thought was an interesting study from the standpoint of advertising. This was actually a law, not a study, that was put out because of a law that was put out because of this study. The National Securities Marketing Commission is a body responsible for the supervision and inspection of Spanish securities markets and the activity of all those involved in them. I'm going to show you that study, and probably the most impressive study, really, and I believe actually the most accurate, but not the best respected, because it's from Brazil, and that's a crazy market. But these guys, Fernando, Rodrigo, and Bruno, they're some of the top traders. They were behind this study, so I give it a little bit more credibility, and it's the most recent study of all of these. All of these are within, I think the first one is 1999 and then 2015. Let's take a closer look. This one was 1999. This is the North American study. And if you just look at it calls on firms to disclose risk and screen customers better. Independent analysis found at least 70% of traders lose money, and only 11.5% might profitably trade. Now, what happens to that, 18.5% between, my math served me correctly? They're probably the break-even people. They don't win or lose, but 11.5%, that's pretty close to 90% in this particular study. This is the European study, where they actually went in and they actually requested from these are all firms that transactional firms, and that's really where most of this stuff is based on. Governments go in and they ask for the transition records, or the not transition but transaction records. They cover the names, and they show you how the results is for people who are trading using their platforms. This right here is, and you can see that the losing percentages, the best was 63%, so the 36% winners. Over here, you've got 3/4 winners and 1/4 losers. They actually request the record. So I'm not, in a way, I'm not sure they give you, these firms are giving you everything, but this is not the only page. This is the other page, the rest of them, of which you see down here that 86% in this particular. So this is closer to what we're assuming is true, or we think may be true at 90%. The average here is 76.3% in this study. So this study said, all right, 3 out of 4 are losing, 1 out of 4 is winning. but when you're voluntarily asked for information, I'm not sure what you're getting, but let's go with it for now. This was the interesting one that I found: the Spanish National Securities Market Commission resolution of 2019, June 27th. This was where they came out with a law. And in fact, binary options were outlawed completely at that time. And this was only a couple of years ago. But here's what the law said. I kind of clipped this out. If you're going to advertise, this is the standard risk warning. It says between 74 and 89% of retail investors lose money when trading CFDs. This is shares trading in it's equivalent to our share trading in the U.S. So if you're a day trader, you're 3/4 to 90% are losing money, 89%. Again, I tend to believe the higher end here. But what's interesting, and this is other things that you can say when you're advertising as a complex instrument with high risk of losing money. Then you have this, and you have to put it in bold, incidentally. You should consider whether you understand how this is your general. But if you wanted to make an abbreviated version, you still have to include this line with the bold, okay? And you should consider whether you can afford to take the high risk of losing money. So that's a law that they passed. But this is the one from Brazil, which is actually the second biggest market in the world based on volume. So this is a study really to take very seriously. And if I can point right here, we find that 97% of all investors who persisted for more than 300 days lost money. And this is an interesting. These other had certain days that were minimum, but they wanted to, they didn't consider you a trader unless you persisted for kept on trying for at least almost a year. So 397% of all investors, only 1.1 earned more than the Brazilian minimum wage, which is about $30 US, and only 1/2 of 1% earned more than the initial salary of a bank teller, all while they sweated it during the time. And this is the bank teller salary is about $54,000, I have discovered. And so most people know that most traders lose money. So my question to you, and I want to hear from you in the chat, and then I'll pretty much take over the rest, but why, knowing this, why do you believe trading is still so popular? What is your thinking? Why do you think that trading is so popular, even though we know, we believe, and now I've really proven to you to a large degree, I think that it's true. Why do traders continue to go at it knowing this? Even new traders know, and you can make money. The lure of making it big. I'm gonna, John, I think you got it. You got the general principle. You can make easy money. That's what they believe. Any presenter that is presenting their wares are going to show you all the people that are winning, and they're going to kind of not tell you about those people who tried and didn't make it. And it's not their fault. A lot of those people, I find, never followed direction. But make easy money. The lure of making it big, I'm going to give that a big star. It has potential, Danny is saying, and I think that that's also something that's worth noting. If it's out there, they'll take a small amount of money and give it a shot. Easy entry to a world of economic freedom, thinking we are the smarter. Yeah, in other words, we see ourselves as in that 10%. It's an excellent comment by Esteban, and these are all good comments. Isn't the media powerful? Kathy, I'm going to give you 2 stars on that. And I'm going to show you what I believe. Okay, thank you for participating in the chat. And I'm going to show you what I believe from 40 years of wrestling with trying to get traders to appreciate their own capabilities, and yet watching so many of them be unsuccessful. Here's what I have found from their responses to me and from my experience with working with these traders. Reason number one, there really is very little regulation when it comes to advertising. I showed you something from Spain. It's kind of even worse here. As long as you use words like can, this can be for you, this can be you, and show you a couple of testimonials, or phrases like it's possible to. It's possible to triple your money in 2 weeks. You know, the dream out there. And, you know, when I was with the International Trading Group and I was a regional vice president, the office next to me was the lawyer, the attorney for the firm. And we had to pass everything by him. And as long as we put in all of these kinds of phrases, we were good to go, okay? And even the regulatory firms, the National Futures Association, will not approve any language. They'll only said it's good for now, but we do it upon, we're not approving it, but we're allowing you to go forward with it. So everybody is kind of cautious. Everybody is, you know, litigiously defensive. But as long as you put can and it's possible to, you can pretty much say anything. Plus, you put a boilerplate disclaimer somewhere in your ad, and you know it's kind of like that car ad where the guy talks really fast at the end. You can't understand it, but somehow that qualifies for warning you about the fact that you're going to get fleeced when you go in to a car dealership. Trading futures is risky, and only risk capital should be used. Past performance is not indicative of future results. I mean, it's out there so much that even clients can repeat that back to me. They're words that have very little meaning when you've heard them so many times. But if you put that in an ad, you're okay. And you do this and you're good. Okay, so that's reason number one. You can say anything, okay? Reason number two is the trading system and plan and the trader don't match. And in the book I showed you, my latest book, Designing and Managing Trading Plans, I talked, the first literally third of the book was about self-analysis and having you make sure that you understand yourself before you find a matching trading plan or system. And I cannot stress the importance of that. This is why a person with a great, who's making money, hands you a trading plan, or a guru shows you 20 videos on something that made him and his testimonials money, or her and her testimonials money, and then somehow when you try it, it's not working, because one of the reasons may very well be, and it's a major reason that I found is super common, the trading plan doesn't match who you are. Firms that sell trading systems and trading plans are good at one thing: educating you on running your system. Let's call them gurus. They don't know you, your personal strengths and weaknesses, and if their plan is right for you. For them, it's one size fits all. You know, and so they'll say, you know, futures, options, bond traders, stock traders. This is good for anybody. So it's one size fits all. I mean, I say that too with our trading plan, loaded gun, but I make sure that it's for you before you know you dive into it. The truth is that every trader is a little bit different, and the trading plan needs to match you, that particular trader. Okay, a slightly ADD trader, and I'm probably that person, who lacks patience, should likely not be trading a plan that requires waiting for certain criteria to fall into place. He or she may be better fit with a plan that has frequent signals, so that when for instance, I put together a loaded gun, it's really for that kind of person. I like to be in a trade, so I like a trigger and a situation in a simple trading plan that puts me in, and then I work on my managing the trade. That's the kind of thing that for an ADD trader. My accountant is this trader. He's a trader who's a person is usually cautious, would be served by a trading system that has several confirming hoops to jump before they initiate a trade. When I walk in for my quarterly with my accountant, he's on there waiting for the next hurdle to fall before he gets into a trade. That's not me, but there are plenty of trading systems out there that have 4, 5, 6 filters before you get into a trade. That would be great for mine. And he does very well with his. I could never run his trading plan, and he could never run mine. A trader whose father was a gambler, and this is big, past psychology, and saw his family finances obliterated, may be best served by a trading plan that keeps trading losses to a maximum of 1% per trade. So if this person is a person who needs to manage the risk on every trade so that they don't feel like they're gambling as in their family history. So so it's important, again, to match you as a trader with you as a trading plan. There is no one size fits all trading system. Okay, so that's really my point there. Okay, let's get to reason number 3. Reason number 3 is the industry is complicit in what I call the hopping game. So take a deep breath and don't, you're not to blame because you may have gotten caught in this. This is the way the industry has evolved, has learned to work. There's no fault here, except for the fault maybe of not realizing the game that you're playing. Okay, we've already established that the vast majority of traders lose. And this is true no matter how good your trading system is. I mean, most people that come to me have pretty good trading systems, enough to make them money, and yet they're losing. I mean, why is that? The first thing when they come to me for the mental and emotional coaching, most of them have, I'll take a look at their trading plan. Good enough, it'll make you money. You like the trading plan? You say, let's get you to follow that trading plan, okay? But most trading plans are good enough to make money. 90% of traders are losing because there are 2 necessary components to winning trading. A valid trading plan, which reputable gurus can supply, they do supply you with that, and the ability of the trader mentally and emotionally to follow said plan, which they do not supply. So first, you've got to find a guru that has a trading plan. First, you got to do self-analysis. Then you find a guru or a book or whatever you're going to find to a trading plan that matches you. Okay, back tested and forward tested in sim. Get comfortable with the plan, and then do the things that make you mentally and emotionally responsible for yourself to trade that plan, because it's making mistakes that cause the issue. So 2 things are necessary: a valid trading plan and the mental and emotional capabilities to follow the plan. Gurus are good at teaching you how to run their trading plans and system, period. That's it. That's all they do. Although responsible firms will give a mention of the importance of the mental and emotional management to successful trading via articles. Here, look at my article on, look at the paper I wrote on trading discipline. Oh, check out my video on trading discipline. How about and maybe recommending books out there like mine and others. This is not enough to turn destructive trading behavior to supportive trading behavior. It's not their field of expertise. And the truth is, so the losing continues to go on. But the worst part is this: rather than encouraging traders to do the inner work, which to the guru's defense, most traders don't even want to hear about it. And it's not the guru's expertise. So you really can't blame them. So here's what's happening because of that. When a trader loses, and 90% will lose, they will look for another holy grail because of the bombardment of advertising that keeps their dream alive. And I think Chris or Katie or Kathy mentioned it. Somebody, excuse me if I got their name wrong, keeping the dream alive because of the bombardment of advertising, okay? So when the 90% of traders lose, they'll keep looking for another holy grail because the advertised keeps their dream alive. Maybe they'll take a break for a week, but then all of a sudden they'll tune into CNBC and see all these people making money. Gurus know this, and they understand this, and it can lead to cross-promoting from a marketing standpoint, of which I'm one. Every guru out there has a marketing hat. We build lists of potential buyers. For those who don't, every time you grab a free thing, you're on somebody's list. I guess you know that, of course. For those who don't buy our system, many gurus will promote the other guru's system and grab a commission for the referral of that sale. When I first got, and there's nothing wrong with that. When I first got into the business here online, I saw a Forex trader with a Forex system advertising another Forex system of somebody else. And I said, doesn't that mean that they don't have trust in their own system? Well, I think what's happening is that what I've learned is happening is that the individual looked at the Forex system from guru number one, liked the sound of it, but didn't really match it with them as an individual. It was a good system. They bought it. They tried it. Maybe they had a little bit of early success and encouragement, but as time rolls on, the guru is looking for more people to get into the thing, and you kind of forget about that person, and it doesn't work out. And now they're looking for but they've still got a little trust in this original guru who said, hey, if you didn't like my Forex thing, here's another one. And so you get into that next one. Okay. And guru one makes 20 or 30 or 40% of the purchase price from guru two. And that's okay. I mean, it's like gurus helping gurus and leading you on to some other guru that may match. And again, that's the system. You got to understand the system, but there's nothing wrong with that. There's no blame here, except if you think about it. In the end, it serves the industry that you don't win, and you keep hopping from trading system to trading system, so you keep buying, buying, buying. I think you understand what I'm saying. It's the way the system is set up. It's because the majority of traders are being swayed by the advertising and not matching the system to themselves, and they are buying, and the inner workings of the system keep referring you to other people with similar systems, and so everybody's making money. Everybody is getting you to continue on, but you're still not doing it because the system likes you in a way. I mean, the system is set up to serve the losers. And that's okay, but you don't want to be that loser. So let me be clear. I'm not saying that the gurus don't want you to win. I know hundreds of them. By being in the mental and emotional part of trading, I work with a lot of the different individuals that do have more of just do more than an article on it, really want their traders to do well. I know hundreds of them personally, and I can safely say that they do want you to win. But the industry is not set up like that because the industry de-emphasizes the requirement of the mental and emotional management to succeed. It's the trader. It's you. It's you listening. It's you listening to this presentation who doesn't want to face the truth. So why should the guru emphasize it? Okay, and you're not to blame either. All the system, the way it's set up, is is working against you. Okay. Only 10% of short-term traders are profitable. And it's not because only 10% of the traders have great trading plans. And only 10% of traders do anything at all to improve their mental and emotional capabilities, the mental and emotional control. And the truth is that the fact is that these two statistics are directly related. The 10% of traders that are profitable and the 10% of traders that do something about the mental and emotional focus, make it part of their trading plan, make it part of their daily routine. Okay. And again, it can be hard to accept for a trader who can be a little bit too ego driven, but after the third or fourth blown out account, the ego can kind of settle down. And the bottom line is the ball is now in your court. If you're ever going to finally be a consistently profitable short-term trader, you're going to need to include, you're going to need to include a process of managing your mental and emotional capabilities. Or you can remain the turkey in that room, okay? So I pose the question, what is your primary thought? And this is, I'm going to ask in the chat again, what is your primary thought or emotion that has you trade in a way that compromises or hampers your trading success? What is the thing? What is the thought or emotion? What's happening? What's a thought or emotion that has you making mistakes, that has you hampers your trading success? Give me some ideas. Give me a few, and I just want to make sure I cover them. I think I got them all. what are you lacking when you trade from a mental and emotional basis that's causing you to make mistakes? Okay, I see you're starting to don't want to take a loss, right? Fear of losing, huge, huge. And I don't want to sound too much like Donald Trump, but it's huge. The fear and losing, and we find that the fear of losing comes in many forms and has roots. And I'm going to show you a little bit about that in a second. Anybody else want to step up and talk and just put the ego aside and just tell me? I won't mention your name, maybe just your first name. And I want, what is causing you? I'm losing right now, but it will come back up. That's an okay situation, unless you haven't done anything to change the fact that you're losing. Quick money. That's the thought of quick money. I guess that's a motivation. But what is the thought? I mean, is it fear? And we've talked about fear. Is it FOMO, which has been very popular? Anybody victim of fear of missing out on a trade, so they jump in, they try to kind of get in early, or they jump in before all the ducks are lined up. I guess I shouldn't say ducks, but okay, yes, okay, a lot of FOMOs out there. So let me go through then when I've asked this in a poll question. You see that these four are pretty much the high results. Lack of confidence, patience, which winds up to be a huge, we've probably gotten more testimonials based on traders instilling patience in their trading, to wait for the setup, to wait for things to happen before they get into a trade according to their trading plan. This is where big changes can occur. Fear of losing. We just had somebody just mentioned that. Hesitation to pull the trigger, which is a huge issue. These are the top four, and trouble overcoming losses. That was mentioned by Esteval, I think, in the chat just now. This actually in other I do this every year. In other polls is just equal with these. And then there's greed, which fear and greed are kind of the opposite poles. The commonality of this issue can vary with market conditions. Right now, probably the most frequent problem that I'm hearing is the problem of the fear of missing out. Because of volatile markets, it's the current environment of volatility and huge daily and weekly and monthly moves. I mean, these 1,000-point moves in the euro dollar, yes, and it seems to happen once a week. 50, 60, 100 points in the S&P is not a day. I was telling my wife the other day, it was a pretty slow day, and the S&P was only up 20. I mean, that used to be a day where they knock your socks off. Current volatility feeds the fear of missing out. You want the big result, and fear of missing out can be a real problem. But your brain is like an onion. It has many different layers, and the way you approach trading can hamper, can cause issues if you don't turn those issues around. The fear of losing, huge. And so huge that it was the first comment today in the chat. Okay. Fear of missing out. Talked a little bit about that. Hesitation to pull the trigger. When you have, again, if you have a fear of losing, that can be another layer that results in the hesitation to pull the trigger. So sometimes you can, when you turn around the fear into confidence to take the trade because you have trust in your trading plan, that will eliminate the hesitation to pull the trigger. Sometimes the hesitation to pull the trigger is a symptom of a deeper layer of the onion. Lack of confidence, another thing that can wind up that you usually don't work on first, because if you can develop trust in your trading plan, confidence will usually follow that. I was on a talk with Jake Bernstein, who is one of my gurus, and Jake wrote a book called Investor's Quotient 40 years ago that I think is one of the best books ever written on the mental and emotional capabilities of traders. And he said he thinks, even though he wrote that book, he thinks that confidence in your trading plan is, trust in your trading plan is going to solve all most of these, or if not all of these issues. So lack of confidence, as you start picking off these issues, and you're doing, and I'm going to show you how we do that. Lack of confidence will usually take care of itself. Trouble overcoming losses. That's a little bit different than fear of losing. Once you've taken a loss, that can be a slight trauma. In fact, it can be a great trauma when you lose 15% because of a crazy mistake that you made because you were greedy, or you had a huge profit and you decided to put on a big position because, hey, that's just profit money and I can afford to lose that a little bit. And it winds up being a losing day. That kind of trauma, that is hurtful. That disrupts the confidence in your trading plan, and that feeds you and continues for you to be the turkey in the room, okay? Lack of patience. Again, I've mentioned the importance of lack of patience. And greed is something that I probably don't talk about too much. But I think that just like when you're looking, when any of the quarterbacks that just won a big game is interviewed, they'll say, well, I don't get too excited about the games that I win, and I don't get too down about the games that I lose. And I think we can learn that from the standpoint of traders. That's really where we want to be. We want to tighten up those emotions around winning and losing, and all we want to do is follow a trading plan and let that work for us. Okay, so the mind is what you need to work with, and we do it in several ways, but the basic way that we do it, and the way I'm going to offer, going to encourage you to do it, is through the subconscious mind. And this is really not as depicting of the true nature of the subconscious mind being the area in the blue. This is our conscious mind. This is what we're hearing. This is the angel on our shoulder that tells us to do things. You can put in that trade. Come on, it's going to, those moving averages are going to cross. You might as well put in the trade now and and make it happen. And if your subconscious mind, which I'm going to describe to you, is always true for you, whatever the subconscious mind believes is always true for you. If in your subconscious mind you've made it okay to take a trade like that because because you understand the nature of the market and whatever it is, and you have not solidified the fact that you must follow your trading plan, and it's okay to take the trade, you'll go ahead and take that trade. You'll listen to that voice on your shoulder, because your conscious mind will always refer to your subconscious mind to determine whether something is going to happen or not. So you can see, if you don't know what's true for you in your subconscious mind, all you have to do is look at your actions. Your actions are a reflection of what your subconscious mind believes is true for you. So let's get into it just a little bit. I want to give you just a couple of minutes on this. This is an actual picture of the way the brain works, okay? You're looking here at neural pathways. These are these tendrils, these threads. This is energy. We are all energy. I don't want to get too esoteric on you because I don't go that far anyway. Listen, I have a math degree, and things have to be shown to me and be proven to me before I will. Just like I showed you the proof of 90%. I want to prove this to you, and you can find the proof yourself. But these are energy, and this is energy. This is let's call it thought energy. When you have a losing trade and you say, gosh, I always continue to lose. I don't know why it's always me. Maybe I should be a little bit more careful the next time. That's one of these energy waves. And maybe the next one you say, boy, I lost again. And I really need to be more careful. I got to shore up this, but I like my trading plan, but I'm a little bit doubtful. You are feeding your mind these energy pathways, which if you do enough of them, and that's all you're controlled by, that's all your input is, you're going to build a neural net. This is a neural net carrying the sum total of these energy waves, these thought waves of that particular topic. So you have neural pathways that are guiding the stimulus, so that when you trade, when your trading plan tells you to take a trade, when the stimulus happens, the trading plan tells you to take a trade, you see the trigger. It's triggered. The bar is closed. Then all of a sudden you say to yourself, should I take the trade? Well, you're being controlled by a doubtful neural net that says, hold it a second, I just lost on my last few trades. I better be cautious here. And as you're doubting, you're being controlled by this, you lose the trade, the market starts to run away and you chase it, because you're being controlled by doubt rather than confidence, because you've fed your mind the wrong information. You fed your mind the wrong energy that creates a neural net that does not serving you as a trader. So it is your job to develop these neural pathways with messages that serve you. I am a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Those are the kinds of message that when my trading plan gives me a trade to take, I take it immediately, because I trust my trading plan. And I know that over the long term, my trading plan will serve me with profit. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. If those are the kinds of neural pathways that you are serving up to your mind, you will develop a neural net that overtakes the old one. This will diminish, the old one to diminish, and a new one that you've created will now be the response to the stimulus that your trading plan gives you to take the trade. It's as simple as that. But how do you get these how do you develop these neural pathways? How is that done? Well, it's done through getting yourself into an alpha brainwave state. And really, it's just really relaxing and taking a couple of deep breaths. Let's call them meditation. So a thought creates a neural pathways by slipping into an alpha brainwave state. And that really is some deep breaths and sitting in your chair. You can direct specific thoughts and create specific neural pathways. Enough neural pathways create a neural net. I hope that is clear to you, because that is science, that is truth. This blob here is why you're making mistakes. It is the response to the stimulus, and it's not serving you, okay? So I want to offer you a way out. I want to offer you the meditations that serve you in all those aspects that I'm talking about. And the way to do that is to go to thedisciplinedtrader.com. Just write that down, thedisciplinedtrader.com, and click on this, scroll down a little bit, you'll see this banner change. Manage your trading emotions. When you click that see more, then you're going to be taken to a page that has this 9-minute video that says it all. I didn't want to explain everything about it here, but in this 9-minute video, I put together exactly what the Disciplined Trader Peak Performance Formula is. And this 9-minute video says it all. So all you have to do is to go to this site, thedisciplinedtrader.com, click on this see more button under the change, and you're going to be taken here. You see this right here? I don't know if you can see it. It says subconscious training, strength to pull the trigger. This is core module one. There are 6 core modules: overcoming fear and greed, overcoming losses, developing patience. This one is strength to pull the trigger. This is an 11-minute meditation. And this is the longest one of all of them. They're between 7 and 11 minutes. So all I am asking you to do to get out of that turkey pound that you're stuck in is just sit in your chair before you start trading, 7 to 11 minutes, and do this once a day. You do it once a day for a couple of weeks. Just get an 8 or 10 repetitions on the same subconscious training. You'll build enough neural pathways to create that neural net that will now serve you when you have the stimulus that you need the response to, just like I showed you. Okay, so this is where the magic occurs, in these subconscious trainings. There's a lot more in the Disciplined Trader Peak Performance Formula. In fact, it was used to be called the Disciplined Trader Mastery Kit. And years ago, this was sold for $1,997, and we sold thousands of them over the course of several years in its form. It's no longer in this form. We've taken all of the content and we've put it on the web for you, on the internet for you, so that when you log in, you've got everything, plus much, much more. Plus, remember I told you in the beginning, I told you about the 4-minute drill for traders. All 203 of them are in the program right now. These are the 4 basic videos. You know, if you're new to trading, you want to look at the 4 basics. If you want to review the basics, how to manage your risk, how to build a trading plan that's responsible, journaling, which is important. And this one right here is and again, I'm pointing to CDs, but they don't exist. You get the recordings and the videos in the program. But this one was done by the late, great Joe Ross, who spent an hour with me talking about how to run your trading as a business. Okay, so this is all about base content. It's all about foundation. If you're new, you need to listen to these. If you're not new, go straight to go straight to those meditations and get the change. Because if you choose the meditation that is, you don't have to do them in order. Look at the 6, and you know, if fear of losing is one of them, go ahead and reverse that with the meditation on core number 3, because what I want you to do is I want you to get results quickly. And if you pick the meditation that is your cross to bear, you can revert. Lack of patience, pick the 5. It's number 5. Pick that one. Okay. And these are the bonuses of what this are bonus CDs, of which we've got. You know, if you're not journaling, there's a bonus that has 103 or 97 different ways of journaling. I asked my crowd that own this, give me how you journal. It gave me hundreds of different ways of journaling, and there's no better way. It's got to match you. I put in what I thought were the best 97, and I put it in it's 103 pages long. So if you're not journaling, that's one of the bonuses. There's all kinds of stuff, but I want to continue to point to the meditations that really make the magic. Okay, so what's the investment to put yourself in the 10% of traders who actually make money? How much did your last unforced error cost you? $100, $1,000, more in some cases. How many accounts have you blown out since you started trading? How willing are you to accept where you are in your trading effort? You've got to say, hey, I'm tired of this. I'm tired of being in the pen with all those other turkeys. I know that the system is not working with me. It's not their fault. It's my fault, and I'm ready to change. I'm ready to be different. I'm ready to train my mind. How willing are you to invest in your mental and emotional capabilities so that you can be in that top 10% of traders? 1 full year of access, a full year to the Disciplined Trader Peak Performance Formula. Was known as the Disciplined Trader Mastery Program before, okay? And we have changed the title because this is much more appropriate with all the things that we've added. $397. That works out to $33 a month, okay? And I'm giving you 100% risk. Use it for 60 days. If it's not everything that I just suggested that it is, if it's not the kind of thing that can turn things around, if you have a decent trading plan, okay, you need to add the mental and emotional capabilities to it. And I've just showed you how to turn around those neural nets that are, and it's 100% risk. If you're still not on the fence, remember this, this purchase is 100% risk-free. If you don't get the results you're after, just send us an email within 60 days of your purchase, and I'll refund the money to you. Okay, we get so few. And if you act today, I've got a bonus for you. This is the fast action bonus. Okay, Mastery Minutes for Traders. These are 25 1-minute motivators. Okay, and this is what it looks like. This is the first 6 of them. These are something else that I did. These are kind of shot in the arm. It's kind of like the 5-hour shots that you take. These are only 60 minutes long, and traders use it. Most of them use it in the middle of the day. They'll zoom in and they'll say, trust your trading plan. They find themselves wavering a little bit. This is 60 minutes of me talking to you like I'm talking to you now, that you are a capable trader and you can do this. You just need to focus. So consider this bonus. Act now. You got the guarantee. I want to give you this bonus. These are the first 6 of them, emphasizing risk management. There's 25 of them that I'm going to make available to you. Okay, this is the Mastery Minutes for Traders. It sells on our sites for $197. We're going to throw this in as a fast action bonus. So 1 full year of access to the Disciplined Trader Peak Performance Formula, $333 a month to turn this all around. $397, and I'm giving you the guarantee. And if you act today, I'm even going to throw in those vitamin pills, the Mastery Minutes for Traders, which people are paying $197 for. And all you have to do is go to the TimingResearch.com right now or right after you listen to who you're going to listen to, because everybody's going to have a thing for you to how you can be a better trader and buy here, sell here. And they all have meaningful, listen, David doesn't pick weak people that can't perform. These people have good things to show you, but you need to have the mental and emotional capabilities to run their plans. Everyone will tell you that. They'll all tell you that. We are the people that do that. We are the #1 firm in the world likely that does this, okay? And especially the way we do it. So click on that, see more, and the disciplinedtrader.com is where you want to go. So I just left 5 minutes here for any questions that you have. I've kept that reasonably short for you because I just wanted to impress upon the fact that you can change and that the situation is working against you in the way the things are set up. So I really want you to be part of this. And if you've got a question, put it in the chat. Otherwise, I've kind of left a little time for you now. You got 10 minutes, 9 minutes before the next presentation. Go ahead and commit to this. The risk is mine, okay? And it's only $397. I can't make it any less than that, really. It used to be $1,997 when it's disc form, but it's cheaper for me now, not sending out discs and all of that. And plus we've got a lot more people on it. So I don't, listen, I want you to be able to have the change that you want and be out of that turkey room, okay? So $397, get the fast action bonus with the Mastery Minutes and do it now while you're waiting for the next the next person to talk. I've got a question here. Is it a trading room? No, I have nothing. Laxman, you don't come to me. I mean, you can come to me if you want I have trading plans. I call them Simple Trading Plan, which is another site, simpletradingplans.com. If you want trading room or instruction, I'm not about that. I'm about helping you with your mental and emotional capabilities. Okay, everybody else is about that. Listen to all of the other presentations. David has lined up the best in these days in this Friendsgiving. But I am the guy that's going to help get you out of that 90% of turkeys that are just clicking around looking for gurus to help them when they probably have a trading plan that's working for them. It's usually you, not your trading plan. But again, your trading plan has to match you. So that's got to be done first. And hopefully I've shown that. So the disciplinedtrader.com, thank you, David, is where you're going to find the solutions on what we talked about to put you in that 10%. And if you don't have a trading plan, I believe in simplicity. I think you've seen that. I work in facts and simplicity. The simpletradingplans.com is where you want to go for that. So, but for right now, the disciplinedtrader.com, this is really where you want to be. And do it now so that you get the bonus. And I cannot give you the bonus after today because it's just not right. I have to be a person of my word. That's one thing that, if you know me, you know that I am. Okay, David, that is it. I don't see any other chat questions. I guess I've answered every question possible. And I appreciate the opportunity to present what I have again, David, and always love the fact. I know the job that you do in putting all of this together, you and Anka. So you're smart to get Anka on the case too. You used to try to do it alone, but you're smart for getting some help.
Yeah, she's been a great partner on these events.